till I get up. Time is barely on our side. I don't wanna waste what's left.
Hello?
The storms we chase are leading us, and love is all we'll ever trust. Yeah.
You gonna get started?
Waste what's left.
Oh, okay. Welcome, Christy. Want me to beatbox? And I'll try to work on my beatbox skills so I could entertain in the meantime. Oh, okay. Options, stop screaming. Oh, okay. All right. It's been hidden. Is that good enough? Like, disconnect? Or... Stop streaming. Okay. It doesn't say end. It says stop streaming. All right. All right. You got the floor. Go ahead, shoot. I can't hear the music. It's all the way up. It's all right. I don't need music.
Here we go.
I have music constantly playing in my head.
Yeah, I hear the volume. I hear the music when I put it to 100%.
Yeah. I can't hear it over the voices in my head.
One of the rules that I heard is that it's better or optimal if that order block is alone by itself, meaning there aren't other green candles right next to it to the left. But I don't know how valuable that is, or if you're bullish, red candles to the left. I don't know how valid a rule that is. Yeah, I've never seen any back testing or proof on measurable data about which order blocks are more valid or useful. I just use them in general.
Mic check, mic check. Oh, okay. I had built-in microphone unchecked. Okay, I'm back. No, I was saying I really love the way you have the label list set up on. I need to sit down with you and do that, and I'd love for everybody in the group to be able to have that. Great. Yeah, I like it. Now, are you going to 15-minute, or are you just skipping that? Okay. Sure. And it's kind of funny that in my head, the last couple hours, I keep telling, it's been, in the crypto banner group, I'm like, we're in the middle of nowhere, and here you just drew it out, and we are basically in the middle of nowhere here. Like, it could go either way right now. It's a coin toss. Yeah. Agreed. Yeah. So, what is the rule with order blocks when the candle body is almost nothing? Is there a rule on that? Now, what if that doji, even though it's a doji, which stands for indecisiveness, what if it still had a lot of volume on that candle? Then that might be a reason to make it a stronger order block, but you're not really using volume. No, you just. Oh, you're doing volume that way. You don't like using the volume at the bottom of the screen. Okay. Kind of. I mean, you know it's strong, but you don't know the. Yeah, I'm just used to the volume at the bottom for trading stocks for years, because it was always we always looked at what the total volume in the last candle was. Mm-hmm. Okay. That's your manipulation. Oh yeah. Yep. The blue or the small pink? Oh no, the blue is golden pocket. I always put golden pocket yellow. Okay. Yeah.
If you saved those as a preset, then you have to click the actual preset each time if you want to get the text or labels. That should it looks like you got to re-input the text and then resave it. But if you do that, it'll save the text as the preset.
Mm-hmm. Yeah. But the red one did not get filled. No, not all the way. It only came up to the premium discount. Where the, see where price came into the FPG, but it didn't go to the top of the FPG? Yeah. Oh. Okay. Well, now isn't that's an order block now, right? Where that mitigation happened? Yeah. Yeah. There you go. Oh, you had it. Okay. Cool. You don't need it anymore. Yeah. Yeah. Right. Makes sense.
Yeah.
What about mouse traps? Yeah. That's what I try and tell everyone, and that's like the core of trading education is you have to learn the patience of waiting for your perfect setup to happen. And the only way to do that is to measure things, such as if you try and draw every single fair value gap and order block on just 2 different time frames, take the 1 day and the 4-hour time frame. If you draw every single order block and fair value gap, you will already have too many trades to take.
You will take so many trades, and not enough of them will be winners that you'll be out of money. So what you have to do is combine those criteria with things like the point of interest of the Fibonacci levels, or premium discount. Like, you only short if it's up high in premium, and you only long if it's down below in, on your higher time frame. So that right there eliminates 50% of your potential trades, so you're not over trading in that regard. And then you narrow it down a little bit more by saying, all right, I'm only gonna take a trade if it gets to this level and gives me a nice divergence of the price action reader or the money minter. You stack up all of that confluence until you have 3, 4, 5 different criteria to give you a perfect setup. Like, there's a nice bullish dealio. You could short that, and maybe, I don't know, I'd have to look at it closer, but that's the name of the game, is adding up confluence.
Yeah, it's not rocking in any of your points of interest, and so this would be a gamble in a dead man zone like this, which is also, if I might add, a range block from the previous little range here. Come here, you stupid little square. Magnet tool, why are you doing this to me? So, like, this is like a perfect little range block from this previous range. So they manipulated right here. They didn't like that price action, so they brought it right back up and cleaned out all those shorts because everybody was super bearish, and they just wiped them out. They took that liquidity from all the people that moved their stops down to here, and they swept them in a move they weren't expecting.
Yeah.
They might go back down. It looks like adjust this. It looks like so the ribbon's turning up, but I wouldn't be surprised, especially with this bearish divergence right here, if they just did that to clean the order books to go back down, and then probably clean it once more, hit these areas, probably sweep this low to go back up and reverse it on everybody, since everybody's so bullish. Especially
go ahead. That's what the whole smart money idea involves, is if you're the biggest trader in the room, you want to fake out the most people possible and get everybody thinking, oh my gosh, it's time to short, or oh my gosh, it's time to long. You want to catch the most people as possible off guard. So just looking at this chart right here. Oh.
Yeah, I'm here. What's up? That might have been my computer noise.
No, it keeps muting me.
Oh no.
Can you hear me?
Yeah.
I can hear you.
Maybe I'm just tapping on the mute button somehow.
So you're saying,
anyways,
sorry?
what I was saying was, look at this price action, look at this chart right here. If price drops back down to those green order blocks, everybody's going to think, oh man, it failed to reclaim this level, it's time to go short. And so when you realize, oh, everybody is probably going short right now.
Yep.
Think of that as it may not be the case, but you have to think of, what if there's a massive long order just waiting for all the shorts to just plow into and get obliterated, and then it goes long.
Yeah.
So say you're at 30-minute right now, you might get 15-minute or 30-minute candles that look absolutely terrifying because it's going to go straight down, you think. But then on the 1 hour or the 4 hour chart, it turns out to just be a big bullish doji because it recovers back up to that other level quickly, and all you end up with is a wick down to those order blocks
and price goes, off to the races again, 62,000 or whatever to take out those highs. It may not happen that way, but you always have to think, if there's a big player in the room, what is he going to try and scare everybody into believing so that he can get his gigantic order filled?
It's psychological, totally.
Almost always, it's a fake out or a liquidity grab that from this level, like you said, this is kind of no man's land right here. What we would do is same thing that I talked about last Friday is from this level, you see that there are price chopped around up above and price chopped around down below.
Yeah.
So right now you're in the middle of no man's land. You could take a long or a short here if you've got, a squeeze and some confluence of whatever divergence is happening. But that's a low probability trade.
Yeah.
Compared to
let's
waiting for price to jump or fall, look for a reversal, and then trade long or short, from the low or the high.
Exactly, yeah. So that's why we place the POIs and stuff. It's getting late for Kermit, so let's go ahead and let him take the stream over for now, and then we'll end with my little insight that I found with the fib channels. So
was there one more little? Oh, you're gonna do the fib thing later?
Yeah, I'll do that. I'll do that after you since it's late for you. Christy, you just joined real quick. Do you wanna add something before we move on?
I was just jumping in just in case I had to say something.
Okay.
But
yeah, feel free to
not
speak.
just like from the order box thing. Like, I mean, I've been like using them and definitely like the lower time frames too to like get in on trades, like reversal movements.
Yeah, they're pretty good.
What time frames have you liked using?
I mean, I use them on all the time frames, honestly. But like when I'm like bouncing down to like make sure something is like reversing, I want to make sure now that like I see either supply or demand like starting to take over from wherever I'm like looking at.
Okay.
So I'll look for an order block within there to like come down, not catch the next, not take out the low, but like hit that like order block and respect it and then start moving up. Then I know like either supply or demand's like starting to take over.
Absolutely. So when you see it hit those POIs and it's working in your favor, you look for market structure shifts, and once you start getting a reversal signal, then you're getting a green light to enter and set off the bear trap.
If the par and the
Yep.
money mentor are showing reversal right at that point of interest, then it's you gotta go for it.
Yeah, it might actually be a little bit of a quicker trigger than those lagging indicators if you're looking at the price action in the order block.
Sure.
Okay, so Kermit, why don't you go ahead and share your screen?
Okay. So I'm just trying to do application. Okay. I'm gonna do a lot more back testing on it, but what I was looking at today was where price action is in relation to the 50 and the 200, mainly on the 15 minute. You guys want to look at our
real quick? Your chart is really noisy, so I'm gonna need you to be very concise in what you're doing, and or go ahead and just clean up the chart for us. So it's,
when you say 50 and 100, do you mean moving averages or time
the
frames?
EMA 50 and 200?
Yeah.
And Mickey, is there a way on the CMP trader package to draw a ribbon between the 50 and the 200, like in here?
No, I think the 50, 100, 200 ribbons are all embedded, and you can't adjust the values.
All right. Just
You do have the code for a cloud. If you want to shade the EMA ribbon, I have the code for that. I can hook you up.
Okay.
Yeah,
All right. I'll look into that later. All right, I'm gonna shut off all the pivots.
Yeah, just keep it to what you're talking about specifically to clean up the chart.
Of course. Yeah. And I've been I'm always going to use the 30-60. Here it is. It's never going anywhere. The 30-60, 240, and the 12 hour. I've kind of just made the 240 by itself instead of the ribbon with the 360. It's cleaner, and I've been experimenting with 1060 360, or you could do 1030 240. But basically, you are making sure that the higher time frame is going in your direction. Since that doesn't change very much, then you can just kind of ignore that for that session. Typically, if you got a 6 hour par going up and it's breaking back over, you should be good for most of the session, right? But what I've been noticing, and I'm going to do a lot more on it, is if price goes way below the 50 and the 200, let me get that off of there. Like last night, this is last night, right? No, this is on the 27th. This was another.
Can you do me a favor and close your watch list? It's the blue icon all the way to the right. Looks like a piece of paper.
Okay. Okay.
Thank you.
Yeah, we don't need that on there. So let me look for some examples. Let's start right here. So again, you don't know how high over the 50 and the 200, but once you start getting some real estate between the price action and both the 50 and the 200, like I said, if you could draw a ribbon in here, or you can even just draw a circle or whatever. But once you start getting some real estate way over whichever EMA is higher or low, on that side of it, you start looking at the par, or you could use the money minter.
Just so everybody knows, the yellow one that shoots up straight vertical, that is the VWAP. So don't get it confused with a moving average of any sort.
Yeah. Let me shut that off for the time being, because we don't need it for this. Wait, the VWAP is
it's
in...
right there. It's right there. It's right there. It's the 5th checkbox down in the group of 5.
All right, that's gone.
No, it's still there. You turned it back on.
Oh, you're right. What the? I did not turn...
It might be a different VWAP.
I don't have anything else open.
All right,
I have
go back to the settings on Trader
I have all my
style settings.
Yeah, go into style. It'll be in there. Weekly VWAP, daily VWAP.
Daily VWAP.
All right, that's a lot cleaner. Okay. So, and another thing, you can look at the times where everybody's like, "Oh, it's mooning." You kind of get a feel. I mean, you're in other chats with a lot more noise and a lot more volume. People are starting to get euphoric, and it's getting way over. Then you say, "Okay, we're quite a bit above the 50 and the 200, right here." So let me start. Let me start looking at par. Right. So you got the 60 right here, topping out. It's making a V. All right. Yeah, the 6 hours still kind of going up, but it is overbought. But you got the turn here, and you got the 10-minute. But you also have the 30-60. I mean, this is my main sell signal. The 30 and the 60 were way overbought. The 30 crossed below the 60. I'm over here. And then the 60 started heading down. So there was your short. Now, it didn't really do much, right? For a long time. But my point is if you're in that area and you get the signal, it's very safe, in my opinion.
That's probably where some big players got in short.
Yeah. And
because you can see that level gets revisited right before that. You have that, you have your yellow circle, and then price is relatively flat and range bound until it makes another attempt at that level. But then after that,
you can see it begins a gradual decline instead of being totally flat
Right.
after that second stab. So clearly that level was where a massive sell order or take profit order was just waiting, and just somebody's just
Just a massive
banking
limit order, just getting
and not
getting
letting
fed.
price go higher.
Yeah.
And then that downward slope is buyers just slowly getting exhausted until that capitulation of the last few buyers get either liquidated or just give up, and shorts,
They
get
exhausted.
opened.
Yeah.
Right.
Go ahead, Kermit.
All right, let me move on. All right, so you got your stop above the wick high with a little bit of cushion, and you're fine. I mean, you had to have a lot of patience. I mean, this is on the 15-minute time frame. This was like 2 days, but it never invalidated the idea. And then here, as the 4-hour is coming out of the overbought, the 6-hour coming out of the overbought, now you're really feeling confident about it. And it is not too far below the 50 and the 200. So you're riding the trade, right? Got a little bit of real estate here, but it's coming down nicely. The 6 hours still coming down. The 4 hours starting to get oversold. So you might want to start being a little bit cautious. And then boom, massive real estate, right? So you could have taken profits anywhere in here, right? You could have also, right here, the 4 hour, because you want to wait for the 4 hour to start coming up, and then you have the V on the 30-60 here, and a really nice V on that 10 minutes. So a little bit of confluence on 10, 30, and 60. And you could have longed here. You put your stop below this wick with a cushion, right? Maybe I would have been a little bit closer. And then you're in a long now. So if it's really fast and furious, it's probably going to take a lot of time going sideways and consolidating after that, and maybe not always get that complete V motion. But my point is, they're usually very safe areas when you get a lot of real estate over the 50 and the 200. And that's exactly what we have here. We have a lot of real estate between the 50 and the 200. Now, it's all coming down still. So if you're waiting for the turn, you could look at right here. It made a notch down below the 50 and 200, and the 4 and the 6 hours coming up. So now it's a lot safer. You could wait for the 30-60 to cross the 0 line, and that's where I have this buy signal here. And yes, it came back below, but from here, 59.1 to 60.8, I think you guys know me. I think I definitely would have taken profit. You had a $1,700 move there, so you're good to go. Now it came over the 50 and the 200, a little bit of real estate here. And I'm not saying that's a buy signal. I'm saying when you see the real estate there, you look at the par, and right here on the par, right, the 30-60, nice V. You don't know it's going to be a complete V until after you take it, but after you took the trade, 1, 2, 3 candles later, and this is like a nice V in the entire overbought zone. So you're good. You put your stop above the swing high here. And you're pretty safe riding. The whole idea of this is to really mitigate drawdown. I hate drawdown. 500 points is all I'm willing to accept in a bad trade on Bitcoin. And if you're getting extreme overbought and oversold above the EMAs and with the RSI and the par, it's really safe trades. Is pretty much what I'm getting at. And then here's recent. Here you go. Got some real estate right here below the 50 and the 200. So that would have been fine anywhere in here to take the trade. Again, you got the real estate here. You gotta wait for the pars to start turning back down. But again, this would have been a good trade right here. The 60 is starting to come out of the overbought zone right here. Hold on, I didn't want to do that. Yeah, the 60 came up. The 60 is the blue. Sorry, I got 3 lines there. And the white kind of stands out. But it came into the overbought. You got the real estate over the EMAs. And it started to come down. And the 10 is confirming with it. And if you look over here, that's also my rule. The 30 crossed down below the 60. And the 60 followed down. When that happens, you take it. The 4 hour, it's flattening. It wasn't really up steep. You got to be careful. It's really up steep, so you don't want to take it in here. But as it's starting to curve, if you're getting that sell signal on the 30-60, you can do it. And so that would have been right. Yeah, right there.
Since you did that, I just wanted to make a note. I posted in chat as well as in new trader lessons in
Okay.
in the beginning of the trading journey a link to TradingView's keystroke I guess key, so you can see all the keystrokes and commands.
Nice.
Yeah, so that way you can optimize your charting instead of having to find it in all those drop down menus. You can just hopefully get it in your head and do that. So I linked that in chat if you guys want to check that out. Sorry, go ahead and Kermit. I didn't mean to interject there.
That's okay. That's okay. So here, real estate under the 5,200, and I know it was tough. I knife catch this because it was just ridiculously far below, and it was at the I think it was at the previous day. Oh no, this is the previous day low from that way, and the 60 was just way under. That was probably not that wasn't a conservative play at all. Go ahead, but here would have been great.
Yeah. I mean, you'd want
this is the confirmation here.
You'd want that confirmation in that reversal because it could have been a dead cat bounce.
Yeah.
And then once you see it reversing, you're like, all right, well, it looks like it's going to stay in this range for a little bit, and then that might be added confluence. In your you did that circle that's big and fat on the top menu.
Yeah.
There, you just deleted it. If you draw another circle. Yep. All right. See that menu that you just deleted? You hit the delete button on. You see the 20px. You can change that down to a 12, and it's going to be more of a targeted, not so fat.
Oh, I like that. Okay.
Yeah.
Good. Thank you.
Yeah. So you can actually save that as a preset if you wanted to, or not. I don't know. It doesn't really matter.
Cool. All right. But my thing is look for the real estate under and over the 50 and the 200 right when it happens. That's kind of like the knife catchy part. But once you see that real estate open and it starts to consolidate, and then you get a par signal, then you're good to go, because you could have bought it anywhere in here.
Yeah.
And you put the stop. You could just put the stop right here below this. Well, it would have been below this swing, because that one may have not been developed yet.
Can you put an Alt V line, a vertical line on the where you would have taken the trade?
I don't have Alt. I'm on a Mac.
It's the one
Command V
next to the space bar. Yeah, Command
V.
Yeah. Oh god.
That is funny. Now I got clones of it.
Yeah, Command Z.
Okay.
I think it's Control.
Yeah, I saved that from Dr. Spots putting it on the. I love it. All right, so, okay.
Oh man. So,
Anyway,
yeah.
you guys get the idea. It's so I think if somebody's shouting out a coin, or if you see a coin, wow, this one's really getting beat up, or this one's mooning, look for that space, and then just kind of wait as a sniper with the par, the 30-60, or the 10-minute. 10-minute comes up or comes down into a V. Take that. I'm experimenting with. I'm always like experimenting with numbers, but I always come back with 30, 60, 4 hour, 12 hours, like my mainstay.
And one thing about like using this strategy is the price is never going to move the same way. So adjusting your settings and parameters, you're essentially dialing in the tuning of what you're looking for in the chart. So there's nothing wrong with adjusting the settings. If you're looking for a dead set lock settings, perfect settings template, there isn't one. I mean, price is always
price always acts different. Even on the same entity, price will act different. So you have to kind of see what's working at the time.
Yeah, and it's like fine tuning. It might not be much, but you can like fine tune it. Like if you're gonna imagine some sort of dial that you're moving up or down.
So that's it. I just want people to be aware that we can now use the 5200 EMA, and I'm just doing it on the 15. Like I know Christy, some of you guys are using a little higher time frames. You could do it on the 1 hour. So like here, look, the 1 hour. Oh, look, it's basically in the same spot. Here's the real estate. Here's more real estate here.
You also have the death cross right there.
Yeah, and then so here, real estate here, right? It created a lot of real estate, and look, bam, came straight down. Here, where's a good dip? Right here, real estate created, right here. This is on the 1 hour. And then it went up 55 to 62,000. I mean, that's a $7,000 move within 4 days. That's pretty awesome. So, yeah, that's it. That was just a simple thing I wanted to go over. And
all right, I'm gonna do my my little insight that I discovered recently.
Okay, cool.
So go ahead and end your live stream, or go ahead and leave your screen share.
Stop streaming.
Kermit, I'm trying to take notes on an A+ perfect setup on the par system.
Okay.
And so far I have, you're starting on the highest time frame, whether it's the 4 hour or whatever.
Astro,
and you are either want it overbought or oversold, or you at least want it angled in your favored direction, right?
Exactly, yeah.
Then when you have that, you probably also have the EMAs being stretched out and price being pretty far away from the 50 EMA as well, right?
Give me one
Probably.
Or you wait for both of those. Trend favored direction, and that's where you can start to scale into a trade if all of the time frames on the par are slammed at the one level, and then maybe add to that trade if you get a really good divergence of the 30 and 60.
Sure. Astro, you're
now
hold on, sorry, Astro, you're sharing your camera. And I can't screen share.
Oh, I'm just testing out a webcam.
It's working. I see a lizard. It's preventing me from screen sharing. In the
I have to turn off. I have to turn off my camera. Okay, you're good.
So,
Pretty
if
cool
the
though.
3060, the 36, if the 3060 is making a like really sharp move, and especially if it's way overbought or oversold, but way up there, even above like the red zone, right? And it turns on a 15-30 minute, even if the 4 hours still kind of, I mean, if the 4 hours steep, I'm gonna kind of be a little wary. But if it's kind of looks like it's starting to level, even though it had been going up, I'll take it. But you just want to be aware that it could turn on you, and you just put your stop above the swing high. You know.
Yeah, that's what I was trying to take notes on, like what a perfect setup would look like, and that's the discrepancy, or the thing I was thinking of is on that highest time frame, the 4 hour or whatever. It's okay if the 4 hour is still trending against you if it is in the oversold or overbought territory.
Or
because
close to it.
You're starting to scale into a trade, keeping, you're at one risk factor or half a risk factor. And then when that 4 hour rolls over and gives you a reversal, you're probably going to get another divergence on the 3060, and you can add to that trade and get up
when
to
that
one risk
3060
factor.
comes up, when that 3060 comes up and makes that divergence, that's what I call a rebalance. And then as soon as like the 5 or 10 minutes starts to turn after it's rebalanced and the 4 hours still coming down, then that's a good time to add to the trade.
Because that's what I've learned from the really big money traders who are, they're making 7-8 figures a year, or they're making, they're having $10,000 or $100,000 trades. Is they have different levels of risk for different levels of perfection in the setup. So you've got your starting point of, hey, everything is oversold or overbought. We've got an alert in the Discord for that.
Right.
You might start to scale in with one risk factor or half a risk factor if you see that 3060 spike in the direction that gives you a trade in the other direction.
If I get a
But then if it gets even more perfect, you add risk.
Right.
Because you're getting your setup is getting even better, and it's not getting invalidated yet. That's when you make really big money, is when you notice, hey, this isn't just an average, pretty good setup. We're getting into perfection, A+ setup territory here. I should be at 2 or 3 risk factors on this trade, because it is a very
you go double
trade.
size or triple size. Like if your regular size is 2-3%, and then you get that follow through and it's really working and you want to add, then I'll put in another 2-3% to the trade.
Yeah.
Well,
we go.
Let me hit this real quick.
Go ahead.
So I was screwing with the fib channels, and so what you do is wick low to wick low to the high, and then I was doing the inverse. So I was doing.
Wait. Can you show me what width you went from where to where?
Yeah. So I get the fib channel and then wick low.
Okay.
To wick low.
Okay.
And then I'm gonna go to the all-time high. And this is on the daily chart, okay? So now we've established one fib channel. I've been experimenting with 2 fib channels. So I'll go from the high to this high. To I think I went with this low.
Yeah, that's what I would do.
Yeah, you want to go high, low, high in between. Usually.
And is this the right one? This chart. And then I have to organize. So I just chart, and then I don't pay attention throughout the day, and I've been busy today.
I just shift click on all of them and put them in a folder, and then you can hide the folder all at once.
Yeah.
Oh, you can grab all of them at one time?
As long as they're not an indicator, you can shift click on everything.
If it's a drawing, you can. What the? Oh my god! I didn't.
Okay, I've seen
do
like
that.
the famous YouTubers don't even know that you can hold down shift and make a line perfectly horizontal
Yeah,
while
shift.
you're drawing it.
Yeah.
That one I
I
knew. but
remember-
I didn't know about this.
I
Oh
forget
my God.
which YouTuber it was. They were some like really famous YouTuber, and I was just screaming at my computer, "Hold down the shift key, you moron!" Because they're like trying to draw these levels, and they're like
Well,
not.
That would be
It was
my
Casper.
weakness.
It was Casper.
It would be my weakness if I was doing YouTube.
Yeah, I was probably one of those ICT guys.
All right, so I'm gonna clean up this chart entirely.
I would need to have somebody do that chart.
All right, so here's the daily chart, and let's just double check it. Let's just double check where I pulled it from. So this one, okay, so we did the bottom to the bottom and then all the way to the top. So that was the one that I showed you guys. And so this one is, I did from top to, I was right there, so I was correct in that one. And then I pulled the zero line to right there. So I did pull it all the way back to the beginning.
Oh, okay.
All right, so that's where I pulled these two. But I noticed this, and I was like, what the absolute fuck? Like, this is amazing. Look at this
Time
price
frame are you
action.
on now?
I just jumped down to the 1 hour.
Okay.
And look, sticky. Rejection. Sticky. This one, no man's land, but sticky. Sticky. Rejection. Rejection. Like, having the two fibs together, making a pendant.
Are you calling a bounce? Oh, go ahead. Sorry. Go ahead.
A bounce would be like this. This would be a bounce from that fib line.
Right.
And this would be a rejection from the fib line.
I think the word sticky is a good way to describe this type of behavior because it's not perfect enough to trade on. Like if you just came up with some criteria and were like, okay, I'm going to test every single trade where it does this or that, you would not have a winning strategy. However, you see price being sticky around those lines very often. And so it's not a standalone strategy, but it is a very good way to define the trend. In this case, we can tell ourselves, hey, because price is being sticky around these lines, whatever gigantic multi-million-dollar algorithms are out there, they are bearish. That's what you have to remind yourself when you have so much confluence from lines like this. It's not a tradable signal, but it is definitely an underlying aha of the market makers are in bear mode right now.
Yeah.
Or they're doing distribution or profit taking or whatever. Like that is the model that is at play here. Because otherwise you would see exactly the. Oh, you just missed it. My lizard caught a cricket.
Oh, really?
Oh, nice.
All right. That's awesome.
I got about
But
5 minutes.
Okay, well, let me point this out. So, this is obviously making a pendant. And so I'm curious.
Yeah, you got a wedge.
Yeah, there's a wedge here that's formed in multiple different time frames, and a wedge between these two fib extensions. So I'm curious to where, let's just say, this price is going to go once it gets to the 0 day. Once it gets to these crosses, I'm really curious to. There's no.
What's the
hot
price
pizza.
of that? 50. Wait, we are on 57.8. No.
So I'm really curious to see where these crosses, what they're gonna do. what price is going to do at these junctions, because we didn't have those crosses so much back here, is now the cone is really starting to narrow, and price is in these two red brackets on the top and the bottom. That's the like essentially the extremes of both of my fib extension settings. This would be the 0 line is the white line, and that's the 0 line, the other white line.
Yeah. I
So-
would be inclined to say you might have price avoid those crosses, but show a reversal around them. Like if you look at the previous yellow crosses, price wasn't there, but it did have some sort of reversal around that area.
Mhm.
So you do want to watch for volatility when those types of channels cross, because it is what you effectively have is two different very powerful big algorithms that are going to have some sort of harmonic interference with each other at those points.
Yeah,
And
you're
that's going
right.
to give
Every
you
time
some
it crosses-
nasty. That's part of the WD GAN theories
Yeah.
about trading and how the cumulative organic nature of traders gives you a harmonic frequency that resonates throughout the chart. And like I said, it's not a tradable thing usually, but it is a warning of, hey, we're in a downtrend, or it's a warning of, hey, two different major thought processes or algorithms are about to conflict and come to a ultimatum, and there will be volatility and then maybe a big move.
Mhm.
So, for example, when you go all the way down to 40,000 or so, a few months in the future, when the double yellow or the red and yellows cross, that's going to be really crazy. Bump it back to the daily time frame or the weekly time frame and see where way down there. When you get that massive double cross of the yellow pink, way down in the future at below around 40,000 or 42,000, that zone right there, that's going to be bonkers. And price may not be in that exact pocket, but that time is going to be nuts.
And let me explain this.
Or just have a major reversal.
Yeah, these two brackets right here, I entered in manually because they were the extremes of the first setting that I set on there. So that setting is this is fib extension. So these are fib numbers outside, except for the last two, which I did 1.18 and I did 1.236. I think the 236 is a fib number, but
Yeah.
the 1.18. I pulled it just because that was the peak high that line fit on, and so I was like, all right, well this line means something because that's where price ended up rejecting from. So then I just took that setting and then and saved it, and ran both of them
Yeah,
across
there's a
from each other.
Yep.
So right
There's a handful
here,
of tools.
I'm sorry, go ahead.
No. Yeah, finish what you were saying about that.
So right here is essentially like the extremes on both ends to the fib channel meeting and intersecting, and like I'm curious to see what happens there.
A red diamond.
Yeah.
And what I've observed from using these types of tools is if the big giant market makers change their algorithm before that point hits, then nothing will happen when price passes through that time zone. But if they are still in that sell program or whatever it is they're doing, then you better believe that will be a very scary time, or just some sort of craziness, shenanigans will happen if those two sell programs are still in play.
Also,
And there's a bunch of different tools. Yeah, when is that? July of 2025? Yeah.
That's a long way out.
So price could be,
Yeah, but this is
you know,
this is
that
the
could be
zero
when
line.
price could, yeah, that could be price could just grind down and be boring and everybody forget, you know, everybody says crypto winter again all next spring, and then next summer you get a massive pump to 100K or something. Or it could be the opposite, you know, it could moon to 100K from here and then fall off a cliff then at that point. Because at the top of that range, you've got, what are you looking at, 80,000? If you go straight up from that final orange circle, that could be a reversal. Drag, shift, or control click that last orange circle to duplicate it, and then hold down shift. Don't do the center, control click it on the edge and drag. Hold down control before you drag it, click it. And then hold down shift so that you're going straight up.
It was like the soul
So
leaving its body.
right around there, 81,000, 82,000, you better believe that will be a nasty choppy reversal time.
Mhm.
Whether price is up there or down there, that's a mark your calendars and just be careful. Honestly, July, like we should all be taking a vacation then anyways.
Yeah.
Well, if we survive the election.
Yeah. So there's a different, like there's pitchforks and there's a bunch of different GAN tools where you can get these types of lines to have confluence, and they're not really tradable, but they give you either a general trend or they give you a confluence of times to be
Yeah.
like, hey, this time is critical. Certain things are different ideas are coming into conflict, and there will be chaos or chop, revert, or a big reversal.
Let me try to look at it in a different. Let me try to talk about it in a different way, but meaning the same conclusion here. These are all fib levels, so this is the organic nature period of the market's movement or whatever. You know, it's just natural, the fib numbers. In that, did I forget my point? In that, you're like pre-designating your trend lines using an organic method, and like it's crazy the level of confluence that you're getting on these lines.
Can we argue that the market is no longer organic with all the AI and
No,
algos?
it actually makes it more organic. I would infer that
Okay.
the programs that are essentially competing against each other create an organic soup, if you will, of price action and then them fighting each other essentially.
Interesting.
I would say it depends on what your definition of organic is. You know, like is Data from Star Trek an organic creature? No, but he's advanced enough that it's a consciousness, you know?
Does he
And I
do
think that's what the algorithms are giving us now is it may be inorganic, it may be
It's not people driven anymore.
artificial price action, but it
Right.
is still there's still an emotional person giving the command to the algorithm to say, hey, here's sell program or buy program. And so you can still see the confluence of these types of lines, even if it is
But there's
partially or
no
mainly
emotion in
robotic.
yeah, but there's no emotion in 80% of the trades happening in the
I
markets
mean,
right now.
is there emotion when an animal is trying to eat something? Like there isn't
I
necessarily
mean, there's
have to be
emotion
emotion in it.
when a human's buying, there's emotion.
Yeah, but we're talking about organic, and humans are
Yeah.
actually abstract
And I
creatures.
think that the connection is when a human turns on or off an algorithm, that's an emotional decision. So the algorithm itself may be stone cold emotionless, but it is still programmed to the greed of the market maker. You know?
Yeah.
And that's what we have to consider in this day and age as traders who don't have a $10 million algorithm at our disposal is this algorithm you can spot telltale signs that the algorithms, plural, I don't believe in one big algorithm with
Right.
one on-off switch like ICT might. But the algorithms collectively, they have telltale signs. They may be much more robotic telltale signs, but that just makes them easier to spot sometimes when you're drawing a fib channel like this. You can
Yeah.
see how beautifully it is sticky around the lines and say, okay, this may be largely powered by a robot or an AI or an algorithm, but there's still a person flipping the switch, making money. Their goal is to make money. And what is that right now? Sell program
And
or buy program.
let me
And
just
there's your larger bias.
let me just mention this too. There isn't one machine operating. There's a plethora of machines out there doing different algorithms. Um, that is enough chaos to give the appearance of organic nature if you look at it from a macro perspective. Um, Even on the micro perspective, like a lot of the little price action movements, I wouldn't be surprised if there's just like 2 computers or 5 computers just going at it, setting up. But then you got to take the human aspect into it as well, and be like, market makers are doing this manually without some sort of algorithm. Um, Aside from like charting, some charting program they have.
Yeah, I'm not.
Yeah.
I probably need a little bit more talking to on that.
More convincing.
More convincing. Yeah,
Yeah, I don't
I'm
think
not completely sold on it, but yeah, I got it.
BlackRock's Aladdin is rocking it that hard, if you know what I mean. I don't think it's the only game in town.
No, no.
If
I
the only way that these programs will be the only game of town is if um, they all effectively connect to the internet completely and start talking with each other, like Skynet. And then you'll see all the markets go down at once. and like it'll essentially just completely
you don't think
destabilize
you don't think they're communicating with each other right now?
I mean, they're hostile to each other. I don't think they have the capacity yet to.
I would assume, yeah, I think there's probably big enough market makers trading in the US and China and Russia. And you have to assume that they are somewhat at odds with each other. And maybe one or two players have way more money than the third player or the second or third player. But either way, the organic nature of the chart patterns is still going to show some slight differences in the trend, or like, for example, we'll know based on drawing these channels, it will become evident when the channels start to mostly respect upward lines as opposed to downward lines. In fact, you can almost see it sort of happening now. On the 1 hour, you could probably draw a pitchfork, and it's going to respect the upward channel here from that low.
Like right here, this low.
Yeah, do you know how to do pitchfork tools? I think
Uh,
it's probably a shift pitchfork or a modified shift pitchfork right there. Yeah, do modified shift. Go back up to the other one. I think I saw it.
Guys,
Yeah.
I gotta head out.
okay. And then
But I want to get with you to do the order block setups. I definitely need to do
yeah,
that.
I keep posting my charts in chat to try to give you a confluence from where your pivots are.
Yeah, I love it. No, keep doing that.
Yeah, I think if we work together on that, just
all
cross
right.
referencing each other, it'll because I still don't understand the pivots as much as I'd like to.
I'll start playing off of your charts too.
Yeah.
And then what I can do is after you post the order blocks, I can post the order blocks, and then with maybe like a par and a pivot thing too.
Yeah.
So I mainly just use the CPR to figure out if it's going to be a whopper of a day or a sideways day. if it's going to be a sideways day on Bitcoin, but gold has a narrow CPR, that's the one I'm going to probably play that day.
Yeah.
You see what I'm saying? I'm looking to see what's going to have prediction for the most volatility. That's the one I want to be involved with. So, but all right, it's just the three of us. I'll let you two
Yeah. Real quick, can you
mess around with this.
you got it, buddy. Thanks for doing the stream.
All right, you're welcome. All right, good night,
Thanks,
Astro.
Kermit. Yeah.
All
See you
right,
next
man.
time.
Thanks, and thanks again for the mic. All right, I'll talk to you guys.
You got it, buddy.
All right, bye.
Okay, so
Mickey, I saw you. You almost nailed that pitchfork. You had it there.
yeah. So what is it? I was looking at the image. So it does the high.
From low to high and then to low. Go forward. The other one. That one right there.
This one?
No, the other one. Lower. Yeah, see?
Okay. So
Yeah, get that low there.
good magnet.
But you can see how that line, that lower line, is perfectly respected some of the time. So that right there was some sort of buy program grinding up to that high, and then it popped where, like we were talking during the rest of the stream, profits were taken.
Yep.
And that's a algorithm buy program at play right there. And I should make a screenshot of that and write it up in the group just as like general education. But those types of tools, the pitchfork, the fib channel, those are really good tools, not for specifically trading, but they're great tools for detecting the telltale signs of the market makers and the giant algorithms. They're a dead giveaway for what's going on. Like for this one, start from that high.
Oh, because it's a down channel.
It's a down channel, so start from the all-time high and then go to the low, low, low. Yeah, that one right there. No, you were right. Sorry. Go back.
This will make it easier.
Yeah, and you can change it from modified to original pitchfork later in the settings. But yeah, go to that low there, and then go to the high right after the big green vector candle. Or is it? Oh, that is that. I forget which high is higher.
I like this one better.
But that's probably right along the lines of similar to your fib channel.
Let's
and you can see, look at how amazingly it almost perfectly taps that high before that massive drop.
Mm-hmm. And it just like it respects the 50% line once, twice, maybe 3 times.
Yeah,
otherwise price just fucking blast right through it.
And also look at before the fib channel is fully drawn, you can see how that 50% line is being strongly respected in the black area too.
Mm-hmm.
That means that right there is when the algorithm is getting turned on. So whatever giant market maker took tons of profits at those highs, and they are changing the algorithm slightly to shift their priority to profit more from shorts. And that's how you get that almost perfect kiss of the high, and then it just slams down.
So let's cross-reference this a little bit. That's my inverse one. I think this is my main one. Yeah, this is my main one.
Ooh.
So it's not as steep of an angle.
But you can also go in and change the pitchfork to regular. Just double click on it and it'll bring up the settings. Go to style at the bottom there where it says, and go to original. Yeah, shift is the original will be like that. Yeah, it's usually a modified shift in my experience, but depending on the extremity of the trend,
Mm-hmm.
you'll get one or the other. But yeah, I usually start with a modified shift, and again, it's not really a tradable line, but the stickiness of the line really gives away the market maker's
Dude,
trending
I wouldn't
of the
necessarily
algorithm.
say it's not tradable. So check this out. If you're trading on this time frame and you're doing these massive swing trades that are taking months, every time that it gets to some extreme, long right here, short up here.
Yeah.
You know, and like if you're patient enough, you're gonna come out a winner. Now, when it's in no man's land, you might have a little bit, you know, even this, like that would have fucking rocked you.
Yeah, that you'd get stopped out there, but
Or you can knife
yeah.
catch and like that was that news event, whatever, I forgot what news event it was. That was like the bad job report.
That would have been where you knife catch that order block that's the previous that we
Mhm.
talked about down at 40 whatever it was. But yeah,
All right, well, this is the
I've been
straight.
doing research into this for like a long time, but I haven't found anything tradable
Yeah,
in the long run, but it's definitely frequently really close to being beautifully and beautiful and tradable.
yeah, I mean, I don't
So,
know, dude.
anyways,
Like some of these points on the fib, like they're definite, like solid trend sticky areas. I mean,
yeah, I think you'd
it's
probably be fine to just wait for price to hit those levels and then zoom in and look for a short or a long.
yeah.
That's probably the name of the game, is to use your regular strategy in confluence with these larger channel trend tools.
Well, yeah, that's exactly what I'm thinking. Like, this is the 30-minute, which is the chart that I've been trading, and it's like hot sauce, dude. Like, I throw in order blocks on top
Yeah.
of this. Uh, I'll just have to make a chart for order blocks. But yeah, I mean, there's some. I like it. I like having these up.
Yeah.
So, all right, let's
I
go on
should
this.
send you some examples of the pitchfork.
Yeah.
Those the pitchfork and the fib channel are really useful for defining the trend and finding trade zones.
Yeah, let's do that. I think that'll be good. It might even be worth
All
like
right.
throwing those up in charts, and so that way people can. So when you just
Yeah.
post a chart,
We
and
should do that at least like once a week and be like, hey,
yeah,
the algorithms are trending down. Here's proof. Every single week, every Monday or whatever, be like, you know, the algorithms appear to be trending down or up. I can
yeah.
do that every Monday.
Okay, yeah, that's perfect. I think that'll really help people.
Cool. Yeah, the
Yeah,
only other thing I'm doing right now is I'm just trying to collect specific rules for our strategies, our proprietary strategies, using that's why I had to ask Kermit the questions today was I want to be able to have like a very clear cut tutorial video or documentation of, hey, you want to trade the par or
yeah.
this or that?
I'm
Here is what an A plus perfect setup looks
yeah,
like. Here are some other rules, that are more subjective. And then here's a back test of say 20 trades that follow the perfect A plus setup and proof that it is a profitable strategy. Because I think that is worth money to potential subscribers,
yeah,
is just having very clear evidence proof that a strategy is documented to say, if you wait for perfection, you will get profit, you will get results.
yeah. And then you're not losing anything. That's the whole
And
point.
also proof, yeah, also proof that you should, people are impatient because they don't have proof of that perfection comes along.
Mhm.
They might think to themselves either, oh, I'm impatient, this setup might work, it's not perfect, but I'm going to take it anyways. They don't know the win rate of that imperfect setup, but also they don't know whether a perfect A plus setup comes along once a week, once a month, or every single day. And if we have that, if we can add up that kind of data with saying, hey, a perfect A plus setup on the squeeze or the par, a perfect A plus setup averages, 5 or 10 times a week. So
Yeah,
that right there gives people
proof or help to be patient and wait for perfect trades.
Yeah.
So
Let's
I'm
go
trying
ahead
to
and
I'm trying to build a spreadsheet and
let's
collect data there.
yeah, let's go ahead and end the stream now, and then let's talk about this a little bit more off stream. So thanks for joining us,
Cool.
everybody. We went a lot longer than I was expecting today, but I really appreciate you guys all watching, and keep stay tuned. Stay tuned. We're gonna keep doing these every Wednesday and Friday. If you want to join the team, let me know.
Yep.
Shoot me a DM, email me, cartoonmoneyprinters@proton.me. Um, Let me know if you're interested. We're always looking to expand the crew, uh, either through memberships of new people or experienced traders. So do that. We got 3 months free trial. We got 90 days free trial for anybody that joins. So join that. Try us out for 3 months, a quarter of a year. See if you like us. And then, hopefully we can prove to you that we're in the business and we're good on what we do. So